Good morning, everyone. This is Marshall Giller bringing you the morning comment for August 20th. The dollar's up over the last 24 hours against almost every currency we track. Yesterday's announcement of much stronger than expected housing starts and building permits for July, coming after Monday's strong National Association of Home Builders Sentiment Index, has given the market more confidence that the Fed's likely to start hiking rates soon. Yellen has cited the weakness in the housing market as one reason for being cautious. So if housing is now back on an improving trend, that removes one more barrier to tightening. The Australian dollar moved lower before RBA Governor Stevens gave his semi-annual testimony before the House of Representatives. In his testimony, he said the risk of a material fall in the Aussie is underestimated and that intervention to stem its rise remains part of the RBA's toolkit. Nonetheless, the Aussie was slightly higher after he spoke than before he started, probably because he downplayed the usefulness of further monetary easing at this point in the economic cycle. I still feel the Aussie is overvalued and is likely to decline. Japan's trade deficit in July was largely unchanged from June on a seasonally adjusted basis, but it was much worse than expected because imports rose instead of falling as people had thought. The country's continuing trade deficit, I think it's like 40 months in a row, is one reason why I think the yen is likely to weaken further. Figures had little impact when announced, but later, after euro-dollar broke through the 130.30 support, dollar-yen moved sharply higher and took out the July 30th high of 103.09, setting the stage for further gains, in my view. As for today's indicators, the Bank of England and the Fed released the minutes of their recent meetings. For the Bank of England minutes, the big question is whether anyone will dissent and vote to hike rates. If there are no dissenting votes, I expect sterling to fall further, given the recent string of poor data for the UK. If the meetings reveal a dovish picture, we could see the pair below 166, the figure, for the first time since April 7th. As for the FOMC, the statement following the meeting had a slightly more hawkish tone in line with the improvements in the economy. It showed that the committee believes it's getting closer to achieving its goals with regards to both inflation and employment. The minutes could reinforce this idea and give the dollar rally another leg up. At the same time, the statement highlighted the difficulty the FOMC has in figuring out what's really going on with the labor market, as different indicators give different readings. We might get more details on this debate today, but they're likely to be overshadowed by the discussion of this precise topic at the Jackson Hole Symposium during the rest of the week. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Head of Global FX Strategy at IronFX Global, wishing you solid trading.